trust you're all doing well. I trust you all had a great day. Okay, this is Pulelani here. So once again, we are here in our YouTube video. We'll be talking about what? We'll be talking about market structure. So I'll just try to be as quick as possible. I'll try to make it as short as 10 minutes. So I'll just try to be as quick as possible. So we'll be talking about market structure. So what is market structure, by the way? So we can just say market structure is just what? It is the character of the market in that current moment. That it is what it is the character of that moment of what the character of a coin in a current moment. Right? That is what I can say. What market structure is. It's just what it's just the character of this particular coin or of this market at this current state, right? At this current time. So those are what those that we call that what a market structure. How is the market formation in this moment? So want to see what that this is what we call what we call it a market structure. So it is what it's just the character of a market in that given moment. The character of the market in that given moment, right? So we've got different types of characters, right? Of characteristics of the market. We've got different types of characteristics of the market. We've got what? We've got the trading market, right? We've got the ranging market. We've got the trading market. Got the ranging market and the reversing market. Meaning what? Just going up, then now change from going up to going down. So we call them reversal structures, right? So right now we're talking about what? We talk about what? About this trending market. Right? We've got an uptrend and a downtrend, right? So we start with what? We start with the structure of an uptrend. We start with the structure of an uptrend. So it is just formed by what? By these higher lows and lower highs, right? It's formed by by these higher highs and lower highs, right? So this is a formation of an uptrending structure or of an uptrend market structure, right? We have the swing highs and the swing lows, the higher highs and the higher lows. So they complete an uptrending or an uptrend market structure. So this is what we call a trending up market structure. Okay, right. So it's formed by what? We've got this area, right? The swing high, right? This coin it breaks your swing high, and it makes It makes a continuation, right? So we've got an impulse, correction, and continuation, right? So it's an impulsive move, a correction, and a continuation. So we know that the market, it doesn't move straight. They never go straight. So we have a correction. Then when this coin breaks our swing high, then it means what? It means that this is an uptrend, or it's an uptrending market, right? Whatever you can call it. Okay. So here, right, we don't want to chase the market. Right? We don't want to chase the market. We don't want to FOMO, right? That's why they say, right? You don't want to FOMO, right? So we've got two areas where we can take our entries, right? How many times have you seen that? Mostly when this coin comes back to this area, it just rejects, right? We've got two areas where this coin, if it rejects around this area, it is still It is still an uptrend, right? We've got two areas around this area that even if the first point can be broken, but we are still We are still in an uptrend if we haven't broke this area, right? So these are the areas, right? We have this previous swing low. This previous swing high, isn't it? Yes, we have this previous swing high, and we have this previous swing low, right? We have these zone areas, right? These are not supply zones. These are not demand zones, right? These are just zone areas, right? We have the previous swing high, isn't it? We have the previous swing high, okay? We have a previous swing high, all right. So what are we looking for here? Instead of us buying, in a passive market, you can see the coin is is trending up. So instead of us buying around this area, no, we don't want to buy around this area. But instead, what do we want? We want this coin to come back to our zone area, right? We want this coin to come back to our zone area. So this is our zone area. We want this coin to come back to this zone area, right? Right. We want it to come back to this zone area. Then when it comes back to this zone area, right? This is where we're looking to what? This is where we're looking to buy, right? This is where we're looking for buy opportunities around this area, right? This is where we're looking to what? To take our buys around this area. Or else, if you don't see any reversal patterns around this area, if it doesn't serve our trading plan, we know that, okay, even if this coin can break this zone area and come back to this area, we are still in an uptrend, we are still valid, right? We are still in an uptrend, we are still valid, right? So we check our entries as soon as we see reversal patterns. That will depend on your confirmation. How do you confirm your entries? That depends on you, right? So we check our what? We take our entries, right? Then our target is what? Our target is what? It is the previous what? Swing high, right? It is the previous swing high. Why the previous swing high? It's because we know that, okay, around this area, right, we might have opposers. Maybe it wants to form a what? Maybe it wants to form a double top and it just continue going down, right? So we know that, okay, around this area that we might have opposers. So we can just set it as our what? As our target profit, or we just take 50% of our profit around this area, then you allow the other 50% to what? To continue running in that coin. So that is what we're looking for in an uptrending market, right? That is what we're looking for in an uptrending market, when our coin is what? When our coin is trending up, right? This is how we take entries. You don't just jump into the market. You don't just jump into the coin because people have said this coin is trending up. No, this is what we're looking for. This is the structure we're looking for in the market, right? So let's go to the last one. Looks like today I'll just talk about the trending markets alone. Then I'll keep on making videos in terms of on this market structure. So you can call this part 1 of market structure, right? We'll have two videos about the market structure. Meaning there are 2 more videos to come about this market structure. So we have part 1, part 2, part 3. So this one is part 1, and just subscribe to keep updated on the next videos of market structure, right? So this is part 1 of market structure. Okay, so right now we're talking about we want to talk about a downtrending market structure. When this coin is now trending down, what are we looking for now when this coin is trending down, right? Okay, right. Okay, right. So a downtrending market or a downtrend, right, is formed by by lower lows and lower highs, right? Lower lows and lower highs, right? Lower lows and lower highs, isn't it? Right. Okay, let me make it like this. Okay, let me make it like this. Okay, we have this lower low. This lower high and lower lows, right? Lower high and lower lows. I can even extend it, maybe draw another line around this area. Let's say it was trending down like this, right? Make it a straight line. Let me edit it, right? To make it maybe blue. Okay, right. Perfect. Okay, so this market is creating this lower highs and lower lows. So this is a downtrending market, right? And when you see that we have an impulse correction and continuation. Impulse correction, what do we expect around this area? We expect a correction, right? So there are 2 areas around this this market structure that we call them areas, or we call them key levels. Like these are our key levels. Meaning we're looking around these areas. Like, okay, if this coin fails to break these areas, then we're looking for we're looking for either for short entries, by the way, because if it doesn't break our key levels, that means that this coin is more likely to continue going down, right? So these are continuation, right? These are continuation entries and market structure, right? So here we have this previous swing low, isn't it? We have this previous swing low around this area, and we have the previous swing high, right? So these are our key levels, right? These are our key levels in this market, right? So I just made an example, right? I want this coin to come back to this area. So when I see reversal patterns around this area, I don't hesitate. I just take short entries, meaning I expect this coin to continue going down, right? That's what I'm expecting in this coin, right? To continue going down. But I know that even if it breaks what, even if it breaks what this previous swing low, I still have a what? I still have the previous what? The previous swing high. What is my what? Is my what? Is my major what? My major key level or my major resistance, whatever you can call it, right? So this is your what? This is your major what? Key level. So I want to see if we can, if we see reversal patterns around this area, we just don't hesitate to take what? We take our short entries without hesitating. If we see reversal patterns around the area, we just take our what? We just take our short entries, right? Then our target is what? It is what? It is the previous swing low. That's it. That's it, right? That's it, right? That's how what? That's how we take our entries using what? Using what? Using market structure. In this case, we're talking about what? We're talking about the trending market structure. So tune in part 2, whereby we're talking about what? We're talking about what? About what? The ranging market structures. Then on the last one, we'll be talking about what? About the reversal market structures. So stay tuned. Subscribe and what? And comment and tell us how was this video. How did you feel about this video? Do you find it educational? Did you find it helpful in your trading career? Again, if you want to join our free group, I'll just send the link below so you can join our free WhatsApp group. Where we have Zoom meetings almost once per week. Whereby I have a Zoom meeting and I talk with you, ask questions, whatever I want to know in terms of trading crypto. So we have that WhatsApp group for now, right? So okay, thank you so much, guys. Thank you so much. Have a great night. Thank you.